What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the craziness that happened today in the markets. And oh boy, did we have an amazing and epic comeback today, guys. What we saw today was absolutely unbelievable. At some point in today's trading session, we had the NASDAQ 100, and S&P 500 down almost 4%, and they ended up being able to pull off a green day. And something that is worth pointing out is that the best performing index today was the Russell 2000, which ended up going up 2.29%. In my opinion, guys, the Russell 2000 is my favorite market leading indicator, and the Russell was the first index that started to go down, so the Russell led the way down. And can the Russell lead the way up? That's a puzzle piece that we have on the table. I am not calling a bottom over here by any stretch of the imagination, but something that is worth pointing out, as I just said, is the fact that the Russell 2000 was the best performing index in a day in which we had, until noon, a massive bloodbath all across the board in the markets, and it actually ended up being the best performing index today. And sorry guys, the NASDAQ went up 0.63%, Dow Jones went up 0.29%, and the S&P 500 went up 0.28%. If we take a look at the advances and declines distribution of today's trading session, this indicator also saw an amazing comeback, guys. So near noon today, we had almost 6,000 stocks going down and only 1,000 stocks going up. And we ended up having 3,600 stocks going up and 3,800 stocks going down. And if we take a look at the sectors of the markets, nothing but an amazing comeback, guys. Near noon, the worst performing sector was consumer discretionary because Amazon and Tesla were getting absolutely crushed. And consumer discretionary ended up being the best performing sector today, going up 1.20%. And the worst performing sector was utilities, going down 0.96%, and also healthcare, which went down 0.33%. Two very defensive sectors ended up being the worst performing sectors today. So we have a lot of worries as of now on the table, guys. Remember that on Wednesday, at 2 p.m. Eastern Standard Time, we're going to have Mr. Jerome Powell. We are going to have the Federal Open Market Committee. We also have concerns about a possible war on Ukraine. And now we have another new concern, guys, because the markets are also thinking about a possible recession of the economy. And why? Well, because the 10-year Treasury yield has been going down for 4 consecutive trading sessions. That is not a good sign from a recovery standpoint. So we have a lot of concerns on the table. And I think that, today could have been a bull trap. That is a possibility that we cannot rule out. And tomorrow we might have another very volatile trading session, or we might see the markets just, trading sideways and waiting for Mr. Jerome Powell on Wednesday at 2 p.m. Eastern Standard Time. After the Federal Open Market Committee, the next big, and I should say huge concern for the markets is going to be the CPI data report of January, which is going to be released on February 10th. So if Jerome Powell doesn't sound like a total hawk, if Jerome Powell sounds a bit dovish, the bottom that we saw today could have been the bottom of this correction, guys. So the S&P 500 has gone down more than 10% in only a matter of 23 or 24 days. NASDAQ 100 went down almost 15% in a matter of a few days. So we have seen a very aggressive correction, and it looks like the markets are simply pricing in the very worst case scenario with the drop that we have seen so far in the markets. However, If Mr. Jerome Powell happens to sound very hawkish on Wednesday, I don't know. Then maybe the relief rally that we saw today was only that, the relief rally inside a downtrend, and we might see more downwards pressure. So everything is going to depend on what Mr. Jerome Powell says on Wednesday at 2 p.m. Eastern Standard Time. And now let me take a look at the earnings reports that are going to be reported tomorrow. Today we have IBM Reporting Earnings. I haven't taken a look at that earnings report yet. I'm going to do it in just a second. And tomorrow, before open, we have Johnson & Johnson, we have General Electric, we have Verizon, we have American Express, we have Lockheed Martin. Watch out, because we could have a war in Ukraine. You never know. We also have 3M, we have Nextera Energy. That's before open. And after close, we have a very important earnings report, guys, Microsoft. I am really wondering what Microsoft's guidance is going to be looking like. This is going to be very important for the sentiment of the markets. If Microsoft happens to present a weak guidance, I think that isn't going to be positive for the markets in general terms. We also have Texas Instruments, we have Capital One, and that's it. Those are the most important earnings that are coming out tomorrow, before open and after close as well. And before going over, guys, the indices and the stocks that I am going to go over today, I want to show you some trades that I took today. Let me start out with the poor trades. Not poor trades. I had to take a couple of losses today. I tried to short sell the S&P 500. It didn't work out. And I also tried to take a bounce back up play on the S&P 500 earlier today, and it didn't work out either. It happens, but I had a very solid day today. So let me show you guys. In the case of SPXS, I purchased 2 hours ago at 3 p.m. Eastern Standard Time. I purchased 150 shares at $22.20. I paid $3,329, and I ended up cutting the loss at $21.15 because we saw a very decent rally into the closing bell, and I paid $3,171. So I ended up taking a loss over here of $140. And earlier on today, TQQQ. So I couldn't, guess the bottom this morning, and I took a bounce back up trade at $54.11. My number was wrong. It happens, So I purchased 100 shares this morning at $54.11, paying $5,411, and I ended up cutting the loss at $52.52, and I was paid $5,242. I ended up losing over here $160. So between SPXS and TQQQ, I took a loss of $350, $380. However, let me show you right here, guys. So Tesla, guys, I think that this is my most profitable trade overnight. Take a look at this, guys. So let me pull up here my Tesla story. So on Friday, check this out, guys. I sold a leap actually of Tesla, a covered call that expires on January 19 with a strike price of $2,000, and I was paid $14,500. And since Tesla fell off a cliff this morning, just like the rest of the markets, I ended up buying back this covered call, and I paid $12,690. I ended up making over here $1,800 overnight, and I also bought back some call options that I sold on NIO. So on January 12th, I sold 6 contracts, 6 call options that expire on, this is mid-August, August 19, correct, with a strike price of $45. Since NIO fell off a cliff, keep in mind, guys, that both NIO and Tesla are long-term positions for me. So I was paid on January 12th $1,350, and today I was able to buy back these 6 call options that I sold, paying $660. I ended up making over here $690. And I also sold or I closed a call option on IWM ahead of time, arguably. That's fine. It is what it is. So let me show you over here. I sold, this is a call option that I actually purchased last Friday into the closing bell. So let me see. Yeah. So I bought the $199 call that expires on February 11th, and I paid $666, and I ended up closing this position today. I wanted to play it safe, and I was paid $755. So I ended up making today, guys, already deducting out the losses that I took on SPXS and TQQQ. I ended up making $2,300. So I had a very positive day, no doubt about it. Okay, S&P 500, what could happen tomorrow? So we saw a massive reversal today, guys. As I said in the introduction of this video, S&P went up today 0.28%, and it closed today's trading session at 4,410 points. So let me show you this, guys, because this was epic. So the trading session opened and the S&P 500 dropped. I mean, from the, let's say, pre-market session until the bottom that we saw today at 4,222 points, the S&P fell 4%. Absolutely unbelievable. Afterwards, we kind of saw a double bottom formation at 42.22, and then we, for the most part, saw a V-shaped recovery, guys, up to 44.10. So from bottom to peak, guys, we saw a recovery of 4.50%. This is absolutely unbelievable. And take a look at how I took the run trade today, guys. I thought that on this 1 day, 1 minute chart, the S&P 500 was making a head and shoulders formation. So I was thinking, so this is the reason why I took a trade on SPXS. I was thinking that if the S&P 500 had broken this 180 SMA on this 1 day, 1 minute chart, it was very likely to revisit the lows of this morning, but it didn't happen. So the S&P broke the upper line of this head and shoulders formation here on the 1 day, 1 minute chart, and it ended up going up in a very decent way for the rest of the trading session. So that's the reason why I took a loss on SPXS, but no worries. I ended up having a very solid day from a trading standpoint. So what could happen tomorrow, guys? The RSI of the S&P is at 36 points, very healthy from a technical standpoint. We could still keep on going up. So the main task that the bulls of the S&P have to carry out tomorrow would be taking on this 200-day moving average at 44.30. Keep in mind that the S&P closed at 44.10. If 44.30 happens to be broken to the upside, then the bulls are going to have another challenge immediately after that in front of themselves at 44.43. 44.43 happens to be a former area of resistance back from early August. So this would be the best case scenario for the bulls in tomorrow's trading session. If we happen to drop tomorrow, then watch out for 43.50, guys. And why? Well, because 43.50, as of now, 43.50, 43.40, something in that vicinity, happens to be the so-called 10% correction in the S&P 500. So we are talking about a very important technical spot at somewhere between 43.40 and 43.50. So let's see what happens tomorrow. I wouldn't be surprised either, guys, if we have some sort of sideways days. The VIX, the volatility has been going up a lot. The VIX actually went up today 3.64%, but at some point in today's trading session, the VIX was up something like 30%. So we might still have another very volatile trading session tomorrow, or we might have some sort of quiet trading session while we wait for Mr. Jerome Powell on Wednesday at 2 p.m. Eastern Standard Time. And when it comes to the NASDAQ 100, let's go ahead and take a look at the NDX. It ended up going up today's 0.49%, and it closed today's trading session at 14,509 points. And let me pull up here the 1 day, 1 minute chart. And as I said, in the case of the S&P 500, this was also unbelievable. So as soon as the trading session opened and until its bottom today, the Nasdaq 100 dropped, guys, 5%. This is unbelievable. So we saw a massive dump of 5%, and then the Nasdaq 100 saw a recovery of 5.84%. This, who is going to be able to forget about these days, about the day that we live today? Guys, absolutely unreal, no doubt about it. Okay, in terms of the next task that the bulls are going to have to carry out, I'm thinking about 14,800 points. 14,800 points happens to be a former area of support back from mid-August and also back from late July. If the bulls happen to make this push to the upside, we are talking about a decent green day tomorrow, guys, almost 2%. So I wouldn't rule it out, but can the Nasdaq 100 have such another positive day tomorrow? That might be the case. Who knows? And in terms of lower support for tomorrow's trading session, I am going to be looking at 14,200 points. I am going to draw a line over here, guys, so you guys can see this. So 14,200 points happens to be a former area of resistance in which the bulls failed back in mid-June. So we are talking about a former area of resistance that, if visited, should, in theoretical terms, provide a good support. The RSI of the Nasdaq 100 is at 37 points, very healthy from a technical standpoint. So watch out tomorrow for either 14,800 points to the upside or 14,200 points to the downside. Now let's go ahead and take a look at IBM. What is going on with IBM? It looks like they reported solid earnings, guys. It should be up after hours. So IBM went down today 0.41%, and it closed today's trading session at $128.82. I am going to pull up here the 1 day, 1 minute chart, and it is up a lot. This is a good sign, guys. IBM is not a very important stock in terms of market cap, but the greater amount of companies that report solid earnings, that is going to be positive for the general narrative of the market. So let's see what happened here with International Business Machines. So what did they report? Do I have the information handy? So EPS came in at $3.35, beating the estimate of $3.14, and sales came in at $16.70 billion, beating the estimate of $16.06 billion. And when it comes to guidance, guys, let me see. IBM sees 2022 revenue growth, free cash flow in line with midterm model, sees 2022 free cash flow of 10 up to $10.5 billion. So this is a very solid guidance, guys. In the case of IBM, very good earnings report. Awesome. This could be, the preamble of a very good earnings report of Microsoft maybe tomorrow, hopefully, guys, because that is going to be a very important earnings report for the markets in general terms. So check this out, guys. So let me pull up here once again the 1 day, 1 minute. So IBM is up after hours 6%. And it is not overbought. Take a look at the RSI on the 4-hour chart. It is at 57 points. So we still have more room here to the upside. So tomorrow, I am going to keep a close watch on IBM, guys, trying to burst above $138. Keep in mind that IBM is trading after hours at $135. So if the bulls of IBM can take on $139, let's just round it up. We are talking about a former area of resistance back from October and also back from early August. I think that we might see all-time high for IBM, guys. Is this all-time high for IBM? Let me pull up here the 3-year chart. $151 would be all-time high for IBM. But I think that the bulls have a decent chance of filling this gap from $139 up to $144, which happens to be a resistance back from mid-June. So watch out for this push to the upside, guys, because if this can happen, then we are looking at a trade that would leave us a 3.18% profit. So we saw a very solid earnings report. And obviously, let's see what happens tomorrow with the markets, because if the markets happen to drop once again in a very aggressive way, then IBM should follow, I think. Or maybe not. Who knows? Because we saw a very solid earnings report. This company is saying that they are seeing a free cash flow somewhere between 10 up to $10.5 billion, guys. That is no joke. So this is a company that is carrying out its business model in a very profitable way. So watch out for IBM potentially bursting above $139 and maybe filling the next gap up to $144. And the second stock of this video is going to be Shopify. This was absolutely insane today, guys. And mind you, one of the stocks that I was taking a look at this morning in order to take a bounce back up play when the markets were severely oversold before noon was Shopify. Unfortunately, I didn't take this trade. So Shopify ended up going up today 6.39% and closing today's trading session at $938.49. Let me pull up here the 1 day 1 minute chart. Take a look at this, guys. So Shopify dropped like a brick. As soon as the trading session opened, it found support at $780 and then it went up. Get this, guys, 20%. So who cocked this bottom, guys? I mean, I would say that for the most part, algorithms. Maybe, some trader, I don't know where. But this was a 20% trade, guys, on one single day. Absolutely unreal. So I'm thinking, guys, that let me pull up here the 3-year chart. And I'm thinking, guys, that the bulls leave this gap incomplete in today's trading session because Shopify went up today 6.39% and it closed today's trading session at $938. So I'm thinking, guys, that if the bulls can fill this next gap or can finish filling this gap up to $1,027. We are talking about a former area of support back from early May and also, back from May of 2021, mind you, and also back from December of 2020. This could be, guys, a trade from, let's say, $945 or $950 up to $1,027, we are looking at a 10% trade. And take a look at the RSI of Shopify on this 3-year chart. It is at 33 points. So this company, the stock of this company, for that matter, is in a very healthy situation from a technical standpoint. So if tomorrow tech keeps on going up, if we can see a continuation of the relief rally that we saw in today's trading session, then watch out for Shopify, guys, from $950 up to $1,030 or $1,020 per share. And the third stock of this video is going to be Bed Bath & Beyond. And mind you, guys, most of the retail stocks out there had a decent day today. So Nordstrom went up, Bed Bath & Beyond ended up going up 8.33%, and it closed today's trading session at $14.04. I am liking the fact, guys, that the bulls of Bed Bath & Beyond managed to hold as lower support this 50 SMA on the 4-hour chart near $13.74. So I'm thinking that if tomorrow the bulls can start to consolidate slightly above this 50 SMA, let's say that we see Bed Bath & Beyond closing hourly slightly above $14, that might be a sign that the bulls are gathering momentum in order to make another push higher and potentially being able to fill the next gap up to $17. $17 happens to be a former area of support back from early December. So from $14.20 or $14.50 up to $17, we are looking at a 16% profit. This would be the trade of the day. Nah, not the trade of the day, guys. The trade of the week, maybe of the month. So watch out for Bed Bath & Beyond. The RSI is at 53 points, very healthy from a technical standpoint. So this is going to be a stock that I am going to keep that I am going to be keeping a close watch on tomorrow, potentially consolidating slightly above $14 and maybe filling this gap up to $17 per share. And now let's go ahead and take a look at another stock that managed to close today's trading session in positive territory. That's Bros. So Bros went up today 10% and it closed today's trading session at $45.51. Starbucks also went up today, so we can make that coffee shops stocks had a solid day despite the craziness that we saw in today's trading session. So take a look at the spot, guys, in which the bulls of Dutch Bros failed in today's trading session, right at this 50 SMA on the 4-hour short at $45. So $45 happens to be a former area of support back from mid-December and also an area of resistance back from early October. So I'm thinking, guys, that if the bulls of Dutch Bros can take on $46-ish on good volume and momentum, they are going to be able to fill the next gap up to $51. $51 is an area of resistance in which Dutch Bros felt on January 11th. So if we were able to take a quick trade from, let's say, $46.50 or $47 up to $51, get this, guys, we are looking at a 9% profit trade. The RSI of Dutch Bros is at 57 points, very healthy from a technical standpoint. So, and as I just said in the case of Bed Bath & Beyond, if tomorrow I see consolidation slightly above their 50 SMAs, both Bed Bath & Beyond's and Dutch Bros, I am very likely to start a trade with any of those stocks or with both stocks for that matter. And before finishing this video, guys, I forgot to take a look at the Russell 2000. So let's go ahead and take a look at the Russell. Check this out, guys. The Russell started to go down on November 8th. As of now, the Russell is, and despite the fact that this index went up today 2.29%, the Russell is 17% of the highs. And today, when the Russell found support at 1,931 points, it was 21% of the highs. So, as I said in the introduction of this video, this is my favorite market leading indicator. So we can make the case that since the Russell, if we want to see things glass half full, I am not calling out a bottom. I'm not saying that we are going to recover from now on. I'm not saying that. I'm just, putting an option on the table. So if the Russell 2000 actually happens to act on this occasion as a market leading indicator, the Russell 2000 started to go down in early November. Keep in mind that the Nasdaq started to go down by late December, and the S&P 500 started to go down in early January. So watch out for this scenario, guys, because this is a market leading indicator. This was the first index that had an appointment with lower prices, and this might be the index that could lead the way up. This is just, as I just said, a possibility, all right, that I wanted to put on your table. And with the Russell 2000, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, and you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the bilingual stock market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.